extended periods of unemployment. What term life insurance can do all that? Western Reserve Alliance Advantage Term with living benefits. No other term insurance product bundles so many solutions to life's unexpected problems. And all in one policy. So for more information, call Brokers Alliance 1-800-290-7226. Stop selling the old term. Start selling the new.
Well, welcome back to the Insurance Zone, the talk show that focuses on insurance in your practice. I'm Steve Savant, your host, financial color commentator, and interviewer extraordinaire. Hey, in this segment of The Biz, I'm talking again with Susan Carlson on long-term care. And I have to say, the first segment of the show, underwriting, I know you're in love with the claims process because, listen, if they're not going to pay claims, why pay the premium?
Exactly.
But on the top, I want to really kind of walk through a little bit of our target audience here.
Okay.
You know, we were kind of focusing on who are the players. And I always thought, well, I'll be talking about my long-term care client. I'll be doing the demographic right around 60, 65.
Okay.
And you thought, no, Steve, there's a lot of other play here.
Absolutely.
So why don't you talk a little bit about the people that we're going to look at and market to. And, you know, when we're done, you know, we're going to try to figure out some kind of maybe marketing scheme or mailing or email or some kind of a thing that we can do with our producers and try to figure out some kind of formatting. So talk to me a little bit about who our underwriting or our target market is, because I'm kind of like, well, as soon as I hit 60, I'll think about it.
Okay.
But you're saying no.
Absolutely not. The first target market is you, is ourselves.
Myself.
Every one of us should have a long-term care insurance policy, especially if we're explaining this to our clients. Because if this is something that we don't believe in, why on earth would they buy it?
Would you carry your copy of your policy page?
Absolutely. And I've had to pull mine out only because the agent that I was with did not have a policy. So, and for just, it was just for
So you were with another agent with his client.
Yes. And the client said, what kind of policy do you have? And he starts...
Him and Han.
And then I just happen to have the policy that I have.
Well, Susan, not only do you have a policy for you, but you have a policy on your parents.
Yes.
Talk a little bit about, well, if I'm the agent, you kind of have to own what you're, sell.
Right.
All right, okay. So I let's say we buy that.
Okay.
And now we do that. Now I have it there. And then our age, we may be already buying it for our parents too, as you do. So you have the ability to say, I know that Susan is quite a bit younger than I am, but you have this already, and I'm thinking, wow, Susan has it, she has it on her parents. And so when you're going to an interview, that the power of purchase drives the close way up front in the interview.
Absolutely.
That's huge to know.
Because you can actually put it out to the client when they're trying to decide what kind of policy design they want and say, okay, well, here's what I bought. And it could be that this is a starter policy. We're going to add to this, or I plan on adding to this as I get older, but this is what I've started off with. And then with me, I just show also with what I bought my parents, and, I pay the entire premium because the policy is designed to help me as a child. And some of the factors that I used is there's Alzheimer's on my mom's side. Now, I don't know for a fact on whether or not it's going to be hereditary, but I went with a lifetime policy with them. Unlimited benefits, meaning it will pay forever. Versus if she didn't have the Alzheimer's, I probably would have went with like a 5-year or something shorter. But by having a policy, I can actually explain that. So as a broker, you should absolutely go and purchase one on you and yourself. Not only do the insurance companies will give you a discount because
for being a licensed agent.
For being a licensed agent, you receive the commission. You can run it through your business and get a tax write-off. What's stopping you? Why don't all of us have these policies? So we are the first.
We're getting a discount from the carrier, we're getting comp from the carrier, and we're getting a tax favored advantage.
Absolutely.
Okay. Well, those are all good reasons, and we might have to talk about that in another show. I want to hear all those reasons and do the math. When we talk about the reason I'm talking about this segment of target audience is because I keep thinking, this is a senior product.
Right.
I mean, all the definitions in the state quantify long-term care as a senior market. So I didn't even come online till 60, 65.
Right.
But you're saying, as I said at the beginning, I'm missing it. Tell me a younger group of demographics that you would go after, and tell me why.
Well, the average age has come down to 57 for buying.
The average
age. And a lot of that has to do because of the work site. And some of us seeing this happen to our parents. Once you've seen a long-term care event, you get it. And it's like, I need to do something. I need to have some type of protection. So if you have clients between their 30s and 50s, ask them about their parents. Have you and your siblings thought about what you're going to do when your mom and dad need care? And also, those younger individuals tend to be business owners. This might be something we can run through your business. We can do a 10-year premium payment, have it paid up, you're done, you don't have to think about it anymore. And then also just for their own planning. All the companies on their illustrations will show you the cost of waiting page. So if you buy it today versus if you buy it when you're 65, how it always works out to buy when you're younger.
So now that's on every illustration?
Pretty much. I believe all the companies have them.
So if you want to call and get an example of this page, which I think would be a powerful mathematical tool to measure economic viability. I mean, that's what we're all talking about. Is this worth it?
Right.
Is the economics worth it? Is there scale to this? I'm wondering if we could, if you want to call 1-800-290-7226, extension 140, that's Susan and her group. They'll go ahead and send you an example of this. Take a page. It's pretty good close, I think.
It's very powerful.
And then, of course, if you want to write her direct, please feel free to do so. Susan.Carlson@brokersalliance.com. Well, I'm looking at the next group up. Now, you were saying in this last group, you say, 57 is the average. I'm thinking, geriatrics life starts at 65. The ARP nation is down to age 50 just to carry an ARP card, right?
Okay.
And I noticed that perks are starting to happen at 55. I noticed when I turned 55, I was getting a lot of little discounts at, different car washes, movie houses. It's kind of cool. You're ordering off the back of some of these menus, the senior menu. Hey, you're finally getting a few bucks back. But when I'm looking at it, you've seen, what's your bottom end of that demographic, would you say?
For
LTC, if I was going to, at 57 is my average. ARP Nation starts at age 50. When should I be talking about my client? If he had the money and the wherewithal to play right now, and as you suggested, maybe look at 10 pay versus continual pay.
I would bring it up with every single client.
So my kid's 20-something? You'd be talking to him already?
Absolutely. Absolutely. Now, it might not be a good fit because he has other planning that needs to be done. But
it might be priority besides LTC.
Exactly. But there's no reason I think that we as advisors should make the decision of who gets the information and who doesn't. And you never know. That 27-year-old might be the one that says, my parents live back in Philadelphia. We're all scattered. Maybe this is something we can all pitch in and buy for our parents. So to me, it's just, you can't hurt. You can't go wrong by bringing up the topic, and you just never know. And, again, people, it's becoming more and more frequent that we're seeing kids buy this for their parents.
It's interesting. As I always say, I'm not a tax advisor or a legal advisor. And before going forward with any of the strategies on our show, always talk to your CPA attorney, and if you're a broker-dealer, compliance officer. But I'm just saying the plans that I've seen, and this is why I'm bringing this up, the plans that I've seen, I would say the vast majority of the time omit LTC planning in estate planning, in retirement modeling. I mean, I just don't see it as frequently, and this is an area maybe even of E&O exposure for our practice.
It absolutely could be.
So we need to bring up. I guess I have to expand my vision of what a target audience is for this product.
Okay,
I mean, that's what you're selling me on right now.
I if I had to put a boundary around it, I would say 50 to 68-ish. Okay, not that people under or over aren't prospects, again, but that would be my target market that I would really go after. And anyone that's between the ages of 58, 64 that own a disability policy, they're a great market because they understand morbidity. They understand, they believe, yes, something could happen to me physically, and covering the risk of insuring a portion of my income for 3 or 4 years, that might not be as much of an issue as now the long-term care. So we've actually seen it suggested of just bringing this up, letting the client decide whether or not maybe they might want to redirect their premiums to what the larger risk is, and that's with long-term care. So
but you're suggesting maybe it might be an advantage to reallocate premium payments from a disability policy over to a long-term care policy.
It could be, and I know all that the goods and the bads to that, but it's just a suggestion and something to really think about and talk to those DI clients.
Now, when you kind of gave this upper echelon number of age 68.
Okay.
Yeah. Now, when we start getting into 70, is it just tough is there just too many issues on an APS? Or, by the way, we're ordering APSs, right?
Absolutely.
So we're ordering 10-year statements. So what's going on? Is it just, you kind of said 68.
Well, it's that would just be the ideal market.
Mm-hmm.
When you hit 73, your decline rate is going to skyrocket, and your clients usually aren't declined because of one condition. It's a multiple of conditions that you and I can't see or that we don't know. But when you look at the premiums versus what they would pay out of pocket, even if they're 84, it always makes sense to buy the long-term care insurance because it's always pennies on the dollar. So it's not that 68 it becomes unaffordable. That is just if I had to put, a bracket around the ideal ages.
When I'm looking at the leverage, I'm trying to always equate, well, people always say I'm self-insuring, I'm going to take it out of my own accounts. I mean, all these things that come up during this time. I'm still looking at the actual math because at certain ages, once we cross over to 65, people say, well, I don't have to worry anymore because I'll just let Medicare pick it up.
Right. And that's, we're not hearing it quite as often anymore. I think the education's getting out there, but Medicare and your health insurance is designed for a short-term illness in which you're going to be getting better. That's not the case with long-term care. I could be in a car accident tomorrow in which I can't get dressed or get bathed by myself, and even though that I'm in my 40s, I need long-term care, and I'm not going to be getting better with that. So my health insurance, my Medicare, is not going to cover it. So I just kind of keep it nice and simple and just say no. Because if Medicare does cover anything, let's consider it a bonus, but we're not going to plan around that.
I would think in our present environment, from a legislation point of view and the budget crisis and all these economic pressures, that Medicare is probably going to be rewritten. And I don't think it's going to be to the benefit of at least everybody under 55. At least that's the language we're hearing today. So really, we have to think about not depending on the government to come to the table. I mean, I think you're going to see benefits cut back. You need about thinking about this, that you're going to be more self-reliant.
Absolutely.
And I think that's a new word that we're using, self-reliant. One of the things that I know we want to talk about just for a second as we're heading out of the show today is, a lot of people, I'll just sell off a piece of my assets to pay for this. But, you may have a lot of money in a stock, and if you had to sell it off, the appreciation and the capital gains would be huge. You'd take a big tax hit just to go ahead and do that. So I really want to look at economics. I always want to look at what do I need to really pay down this bill. It's something that's not going to go away. I'm going to have to face it. You even said it's not if, it's when. I mean, unbelievable. Well, listen, remember, you can have Susan do a quote for you. All you have to do is call her, 1-800-290-7226, extension 140. Call her direct, susan.carlson@brokersalliance.com. You can always talk to me, too, if you want to. thebiz@brokersalliance.com, my extension 147. Don't forget to go out to our website at www.brokersalliance.com. I'm Steve Savant. You've been listening to Business Insurance Zone. That's the buzz on the biz. Get into the zone, the Business Insurance Zone.
This has been a Bravo video event of the National Insurance Clearinghouse and Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. You can contact Brokers Alliance at brokersalliance.com or 1-800-290-7226, extension 147.